Good afternoon, everybody. My name is Mrs. Olivier, and I'm going to do the recording of transactions in the CRJ of a trading business today. Firstly, what does it imply when we look at a trading business? It implies that there are two transactions. Let me explain. Transaction number one, the business bought trading stock to sell at a profit. That's the first transaction. Then every time when they sell that trading stock and there's a sales transaction, the business receives money, but the trading stock always also decreases. So the moment that you sell the trading stock, you receive money and your trading stock decreases. This implies that there are two transactions when this happened. Now, what is new if we look at a trading business? Last year, we looked at a service business. The first thing is you must remember that there are new concepts. The one is cash sales that says when goods are sold to a customer and they pay cash. Then we have trading stock. That is the items that the business buy at cost price and then later sells at a selling price so that the profit can be made. Then we have a cost price. That is the amount the business paid for the trading stock. Then we have the selling price. That is the amount that the business will charge customers if they want to sell the product. It will always be more than the cost price. Then we have cost of sales. The moment that when you sell trading stock, you have cost of sales, and that means the price the company paid for the inventory that already had been sold. In other words, it reduces the trading inventory or the trading stock amount. Then we have the profit margin. That's the percentage that indicates how much profit the business will make. Then we have gross profit. That's when we take the selling price minus the cost price. So the amount that we charge the customers minus the amount that we paid. So it's the profit or the money that we made on the sale. And in the end of the year, we will calculate our net profit. That will be sales minus cost of sales. That equals your gross profit. And then we will add our other income and minus our other expenses. And then we will know what the business profit was made. How do we calculate sales and cost of sales? Number one, if we calculate cost of sales when the selling price is given, we take the selling price, we times it by 100, and underneath we will divide by 100 plus the profit margin. So say for instance, we had a selling price of 150 and a profit margin of 50 Rand, 50%, then we will say 150 times 100 divided by the 100 plus the 50. So mine divided by the 150, and that will give us 100 Rand. Say, for instance, we want to calculate the selling price where the cost price is given. Then we will say cost price, and then this will flip around, and we will say 100 plus the profit margin divided by 100 because we want to increase the cost price. So again, say, for instance, we have 100 Rand and the profit margin was 50%. Then we say 100 times 100 plus 50, so times 150 divided by 100, and that will give us 150 Rand then. Okay, what's still new? If we look at our cash receipts journal, last year we had the current income because the business had services rendered or they supplied a service. For instance, this was a plumber, so he would have had the service of doing plumbing. Right, how does the cash receipts journal change? We get a sales column because we receive money for sales, and we must calculate how much the trading stock cost us. So that will be the cost of sales. So this is how our CRJ will change. So if we look at an example, this is an example of what it can be. We can say completed cash transactions in the journal of Sam Stores and close the journals. And in this case, all the transactions will be CRJ transactions. Now let's just quickly go through them and let me show you. The owner deposited, remember, before I read this further, remember you must always look out of the eyes of the business. Now it doesn't matter what the owner did. That matters what happened to the business. So for instance, the owner, Sam and Giddy, deposited 220,000 Rand directly into the business's current bank account. So what did the business do? The business received the money. Right, second transaction, Cash sales according to the cash register, we received the money. Cash sales according to the cash register, we received the money. Cash sales according to the bank statement. Why? Because it was debit and credit card transactions. Now, when we have debit and credit card transactions, it means that the person that used the debit and the credit card, the bank takes responsibility for the money. Then receive a donation. So receive the money and receive the bank statement. And what was their interest on the current account? So we made we got some interest on our account because we had a positive account. Now let's see how it is transferred to our CRJ. The first transaction said, the owner, Sam Ngiri, deposited 220,000 Rand directly into the business current account. Okay, issued receipt number 001. So what will happen? We will say receipt number 001. What was the day? The day was on the 1st. From who did we receive the money? Sam Ngiri. Right. Why is it not in analysis of receipts? Analysis of receipts is, I don't know if you guys played Monopoly, but if you played Monopoly, you will know that when you go past the beginning again, you receive 200 Rand. Right. So if somebody comes to the business and they pay the money into the business at the cashier at the business, then we go past the beginning and then we put it in analysis of receipts. But if it goes directly into the bank account, that means you put it only in the bank account, 220,000, and then it was not sales. Sales is only connected if there's a cost of sales, then only when there's sales, there will be cost of sales. So the sundry account was also 220,000 Rand. And what was it for? The business for his capital contribution. So it is for capital. The second transaction said on the 8th, cash sales, according to the cash register roll, 8,600 Rand, cost of sales 4,300 Rand. So we received it at the business because they paid it into the cash register. So let's see what happened. Your document number is a CRT. Day the 8th. What happened? There was sales. We received it at the business. It was the only transaction on that day. So we banked the money. The 8,600 Rand. It was sales for 8,600 Rand, and then the cost of sales was 4,300 Rand. The next transaction was on the 15th. Again, cash sales according to the cash register roll, 18,900, and your cost of sales was 9,450. Right, let's see. CRT was our document number on the 15th. It was for sales. It was the only transaction. We received it at the business because we received it in the cash register. We took it to the bank. What was it for? It was sales. And the moment that there are sales, there are also cost of sales. Then on the 26th, they said, cash sales according to the bank statement. So now they didn't receive the money at the bank. It was only on the bank statement. So how does this transaction change? Look very carefully. It isn't a CRT anymore because we saw it on the bank statement. It was on the 26th. It was sales. Bank statement implies that the money was deposited directly into the bank account. So nothing in analysis of receipts. Then we deposited in the bank account because we saw it on the bank statement. 15,000 Rand for sales and 7,500 Rand for cost of sales. Right. Then on the 28th, receive a donation from the Sports Development Center for 500 Rand. Issue receipt. Okay. So now we received it. Receipt 002 on the 28th. The Sports Development Center, 500 Rand in analysis of receipts because they didn't say it was directly deposited or according to a bank statement. So we assume that we received it at the business. We banked it. But remember now, it's not sales. Sales is only, a cost of sales will only be there when there is sales. So where do we write it? In the sundry account, 500 Rand for a donation. Last transaction said, transaction on the 31st. Receive the bank statement from FNB, interest on the current account. So what did we receive? A bank statement. Did we receive it at the business? No, we only saw it on the bank statement. That is why our document is a bank statement on the 31st, and we received it from FNB. Bank statement implies a direct deposit, so nothing in analysis of receipts. 430 Rand in bank and 430 Rand in our sundry accounts for interest on current account. Right, last step, we must add the journal. Right, so again, we do not add analysis of receipts ever. Why? Because this only tells us what is the money that we received at the business, but we receive our bank, at our bank, our sales, our cost of sales, and our sundry accounts. Remember now that cost of sales tells us how many trading stock we have sold. So we will take our sales amount and our sundry accounts, and this will give us then our bank account. All right. This is a very, very elementary cash receipt journal. What is the important things to remember? That if it is directly deposited, it's not in analysis of receipts. Right. Sales always have a cost of sales, and that when you see it is a bank statement, it is not in your analysis of receipts. You must add your bank and all your other columns, and that sales plus your sundry accounts will give you a bank amount. Right. Thank you for your attention. Please remember to complete the attendance register. Here are the link for the quiz as well as the QR code. Thank you for your time.